think we've got a good group here. We've got about 30 participants. So good morning or good afternoon, depending on where you're based. Thank you so much for joining us from across the country for today's Easterseals and Freddie Mac webinar. We are marking National Financial Capability Month today with this webinar. And we really want to thank you for your participation. The webinar is also being recorded, so if you'd like to review the materials later, they will be posted on Easterseals' website. Also, if you'd like to share the link later on with a friend or family member, please do that. So I wanted to quickly introduce myself. I'm really excited to moderate today's webinar. My name is Maheen Qureshi, and I work in Freddie Mac. I'm in the single family housing outreach team in Freddie Mac. Now, you may be wondering who Freddie Mac is. Freddie Mac is a government-sponsored enterprise. We were chartered in 1970 by the US Congress with a mission to provide liquidity, stability, and affordability to the US housing market. It's with partners like Easterseals and other nonprofit organizations and community organizations, industry partners that we get to reach all of you. We get to reach the community through educational and outreach programs and initiatives like CreditSmart. So CreditSmart is Freddie Mac's financial capability curriculum and program. It is free to the public, and it is a curriculum that offers money management, credit building, steps to home ownership, and many other tools and resources to help consumers be financially healthy. So with that, I want to let you know that the goal within the next hour is to engage our experts. We have two great speakers for you today, and they are Sarah Edmonds and Lori Armstrong. I'm going to introduce them in just a moment, and we're going to be really trying to give you a solid foundation for information about how to establish or keep your financial stability through asset building, credit, and other resources that are available for people with disabilities. And I do want to share today's event format is going to be question and answer. So I'm going to be asking both Sarah and Lori some of the frequently asked questions and for some of their tips and suggestions for you. Now, I'd like to turn it over to our experts to share a little bit about themselves. So Lori, could you please introduce yourself? And Lori, you are on mute right now.
Thank you. And thank you again. And absolutely happy to introduce myself. Good afternoon, everyone. My name is Lori Armstrong, and I am originally from Connecticut. And then I moved on to study and live in North Carolina for many years before settling down in Northern Virginia. And honestly, I have to admit, out of all the places that I've ever lived and worked, the Washington, D.C. metro area traffic is certainly my favorite traffic, and it's second to none. We were just talking about that earlier. But for me, I came to Easterseals, DC, Maryland, Virginia, almost 3 years ago in the role of Ticket to Work manager and certified benefits counselor for the Easterseals Disability Staffing Network Department. Prior to being at Easterseals, I worked for 12 years for the federal contractor who has served as the ticket program manager for Social Security's Ticket to Work program since its inception in 2000. So basically for the last 15 years, I've proudly served as an advocate for people with disabilities. But honestly, I have a 32-year-old brother who has special needs, and he wants nothing more than the opportunity to maintain meaningful employment in his community and to be treated with respect and consideration in his work environment. And so he motivates me, and it's a huge factor why I continue to work in this field and continue to work with disability and employment and making sure that everything that goes along with it, because disability employment isn't just finding employment. It's understanding financial literacy, and it's understanding benefits, and it's understanding so much more your rights and in everything that it encompasses. So it's very important to me and very close to my heart. And that's why I'm here today. So I look forward to speaking with everyone. Thank you.
Thank you so much, Lori. And really having that personal perspective and what motivates you is really great. Thank you for sharing that. And I want to tee it over to Sarah to introduce herself. And I know she also has um, reasons that really motivate her to do this work.
Yes. Hello, everybody. Good afternoon, good morning, wherever you all are. Thank you for joining us today. My name is Sarah Edmonds. I currently work at Freddie Mac in the multifamily division, the best division around. And I work as a project manager with our business management group. So just to tell you a little bit about myself, I'm a fourth generation native Washingtonian, but I currently live in the Northern Virginia area. I'm a product of DC Public Schools and a graduate of Strayer University. Started working with Freddie Mac about 11 years ago and got involved with one of our community outreach programs, which is known as CreditSmart. So about 8 years ago, I started working with CreditSmart. At the time, I was undergoing a horrible and contentious divorce. And I've always been told that when you're experiencing problems, you reach out to other people, you'll find out that your problems aren't that bad. So, while I was learning about Credit Smart, going through this divorce, I had terrible problems that were attached to it. I had to surrender my house to foreclosure. We owed the IRS thousands of dollars and heavy credit card debt. I used those tools that I learned in Credit Smart to increase my score from around 250, 275. Yes, it was that low. And what was the hardest part about learning about Credit Smart and learning how to deal with all of that debt, you know, that instant gratification that you get from buying yourself something immediately and putting it on your credit card? Well, I had to learn to get around that. So how did I do that? I shopped at Goodwill and consignment stores. I've learned to live within my means and to pay myself first. And believe it or not, I only have 4 payments left with the Internal Revenue Service. It can be done.
That's a really inspirational story. Thank you so much for sharing that, Sarah. I think that's a great way to start off our conversation today. I want to actually ask Lori the first question. So, Lori, when you work with people with disabilities who are job seekers or have just obtained employment, what are some of the most important financial capability concepts that you want to make sure that they should know in order to establish financial security?
Okay, that's a great question. And so I just want to begin by explaining um, the group of people that I work with. So the clients that I serve or work with through Ticket to Work are ages 18 through 64 and receiving uh, Social Security disability insurance and or supplemental security income, for which I'll just refer to as SSI or SSDI moving forward. So they're receiving these disability payments for their own disability. And so one of the most important concepts for them to understand with a certain level of comfort is how work and earnings can impact their benefits. Equally as important is understanding the work incentives that Social Security has put into place to protect their benefits if they do decide to test their ability to work. So some of those safety nets or work incentives that I'm talking about, for one, is Ticket to Work. Again, we serve clients ages 18 through 64 who are receiving disability benefits, SSI and or SSDI. And what we're set up to do is provide employment support services um, for free under this Ticket to Work program. So that could look like help with resume writing, job placement assistance. Some organizations provide job training. You know, some organizations hire people with disabilities that participate in this program. But additionally, like I said, all of those services are for free, and so that's a huge benefit for people who may not be able to go back into the same field of work that they used to work in before they became disabled. Um, Social Security also has other work incentives in place for Title II or SSDI individuals, a trial work period that really allows an individual to test their ability to work. It's 9 months, doesn't have to be consecutive, where they can earn as much as they want, much as they can, without their disability benefits being impacted at all. So they receive their full paycheck and their full disability benefits for 9 months within a 60-month period. And that's just gives beneficiaries an opportunity to, like I said, test their ability to work and see if it, if it's something that they can do, and really see how much earning potential that they have. Other than that, once they're working, there are impairment related work expenses that Social Security takes into consideration. Um, those are expenses that may be specific to to a beneficiary's disability, that they pay for out of pocket and that they need to pay for in order to work. And that's deducted from their gross earnings and isn't counted as earnings. And then probably the most important thing is just understanding and knowing about the work incentive planning and assistance providers, or WIPAs. And those are benefits counselors who've contracted with Social Security. They're throughout the country and assigned to different states. And they're able to work with beneficiaries, and from when they start looking for employment, when they obtain employment, if they receive a raise, or if their pay rate drops, if they have an increase in pay, and they kind of follow them through their entire employment journey, explaining to them what is going to happen and what's likely to happen and how long they have before the next phase of work incentives throughout that entire process. Just letting them know how their cash and their medical benefits will be impacted by those earnings. So those are great. Those are great tools and assets that I like to explain to my clients, so that they don't go out the door thinking, I'm scared to work, I don't want to lose my benefits. I want them to go out there very comfortable, understanding what's going to happen and what's likely to happen with their benefits, so that they're comfortable with making these decisions. Once clients do decide to work, I like to talk to them about asset building. And assets are defined as something of value that is owned by an individual, whether it's cash, property, or savings. Um, we talk about the importance of, feeling fulfilled within your life and in your community. And some of the greatest fulfillment is in like home ownership. And so a lot of people that receive disability benefits don't believe that they can possibly own a home on public assistance. And it's a great feeling of security to be able to. And home ownership does not impact disability benefits. And there are programs, Section 8 programs, and first-time home buyers programs that can help assist people with this. Of course, there are other things that come into play. Credit, and there has to be some type of consistency in your life in order to develop these assets and to maintain them. And so I think that that's probably one of the next biggest things that they need to understand is about credit. And I know that that's what Freddie Mac does. So
Great. Thank you so much, Lori. I really love that you shared information that's going to be really specific for people with disabilities. And then segueing over to Sarah. Sarah, I know you're going to talk to us about how credit impacts us. Doesn't it impact almost everybody? If you are, as they say, credit invisible, and you don't actually have a credit profile, you are still going to be in a system that is checking people's credit for a variety of different things. Talk to us a little bit, Sarah, about how credit impacts us and what types of things we should take into account when we want to build good credit.
Sure. Let's go over just some simple basic credit information, some terms that you should keep within your back pocket so that you'll know what's going on when you start down this journey. So credit is just simply the ability to borrow tomorrow's money today. That's it. That's the same plain and simple explanation. Using credit, as Lori was talking about, can help you reach your goals. home ownership, and other asset management, a car or something like that. But remember, credit has both benefits and risk. So a debt is usually a loan or using the use of credit. Some common examples of debt are car loan, student loan, mortgage, rent, and or credit cards. There are more, but these are the most common ones. So a loan is usually a debt, usually acquired through a financial institution, say a bank or a credit union, with a written signed promise to pay it back. In this written agreement, you promise to pay it back with fees and interest that have been accrued over the life of the loan. The interest rates are just the cost of borrowing the money. Your credit history shows how you have managed your finances and repaid your debt over any period of time. Your personal credit report begins from the very first time you apply for credit. The most important component of your credit history is whether or not you make your payments on time. So even if emergencies happen, even if a water pipe breaks or something happens to your car or you have an illness or even a death in your family, the creditors do not care about your personal emergencies. It's all business. They're just really concerned whether or not you make your payments on time. Anytime your credit report shows a late payment, a red flag, a little check mark is sort of placed into your credit history. But over time, if this continues to happen, you can also be charged higher fees. So for those of us who have red flags in our credit history, your interest could be 24, 26, or even more interest rate instead of 10% or even lower. We've all seen those commercials where, the 0% interest. Well, that means if you have perfect credit. Consumers with negative or derogatory credit may be charged higher fees and highest interest fees and be offered something called B and C loans. An easy way to establish a good credit history is to take out a small loan, maybe with a credit union, and repay it monthly on time with a credit union. And another easy way to establish credit is to get a secured credit card where you put down a small amount, they may match it or even increase the amount that you can borrow. And your spending limit is based on the amount that's within that account. That way you don't go over and exceed your credit limit. So those are just some basic terms that you should just kind of keep in the back of your head as you go down through this credit journey.
Thanks, Sarah. That was really informative. I just want to make sure, are you hearing my echo? I'm hearing a little bit of an echo.
It sounds better now.
Okay, thank you. It's amazing how credit can affect us. When we do our CreditSmart workshops, such as today, we talk about how if you are applying for a utility account, you want to get a cell phone, if you want to rent a home, if you want to purchase a home, you want to get a mortgage to get a home loan, and if you want to apply for a job, oftentimes your credit is checked. In order to get good insurance rates, your credit matters. So I think one really important point we like to convey to consumers is that you don't have to have a lot of debt to have good credit, because a lot of times people are averse to debt. They don't want to have too much, which is absolutely a good thing, not to have too much debt. In fact, the lower your debt and the better you manage it, the higher your credit and your credit score is going to be. But you can definitely be a savvy user of credit so that you can open up many more opportunities. And frankly, it is more affordable to live life in the United States if you have good credit. So we definitely encourage you to check out our resources that we're sharing on the slides today when you have time outside of today's webinar to learn more about credit. So thank you for those comments, Sarah. My next question is going to be to Lori. So I want to talk a little bit about saving and establishing a budget. And I think we're going to ask both Lori and Sarah to comment on budgeting and money management. But Lori, talk to us a little bit. Give us your thoughts.
Okay, so first I wanted to just mention that um, receiving, well, SSI is a needs-based program, so it's very sensitive to earnings and resources. And so um, it can be challenging to save money while receiving SSI because there's a $2,000 cap for all of your resources, not including the home that you live in or your car, but you know, money in the bank and in other assets. They'll combine them together, and if it's over $2,000 or over $3,000 for a married couple, then it can put your SSI in jeopardy again because it's need based. There are no savings limitations on SSDI or Title II programs. You may save as much as you'd like. And I know that there was a slide that was shown a little while ago that kind of spoke to that. Um, but financial literacy for people with disabilities, including the ability to budget, is really important. And that taken into consideration, we want to make sure that people are tracking their spending and following a plan as best as possible. That could include things like menu planning in advance and spending diary, you know, your expenses versus your income. You know, if you map out all of your monthly expenses and you map out your income and you see, you know, where you are with that. And that's what budgeting is. There are some considerations as well. I know that we just heard about how important credit was in banking and having a credit card, but making your payments and building that up. But some of the things to take into consideration when you are finding a banking facility is you want to check in about monthly fees, ATM fees, and accessibility. Do they have overdraft protection? You know, those are some of the upfront things that you want to think about when you're really looking at a budget. Um, Sarah, you can probably speak more to that about budget basics and exactly how much you should be spending versus saving and setting aside.
Definitely. So to just kind of piggyback on what you were saying about choosing a banking institution, also you want to try to think or compare between banks. Some offer rates, some don't offer minimum balances. You don't have to have a minimum balance in order to open an account. And don't forget credit unions. Credit unions are great because they usually reinvest in the community that you live in. So not only are you supporting yourself, but you're supporting the community around you. So generally speaking, just some budget basics. You want to think about maybe 20% of your income should be around your expense. 20% of your income should be for your expenses. That excludes your house payment, your mortgage, or your rent. So 20% of whatever you bring into the house should be used for those expenses. You have to, in setting up a budget, you need to differentiate, separate between what's a need and what's a want. A need is something required for basic survival: shelter, food, clothing. Think about it when you're having clothing. Does it matter if I have a name brand, or does it matter if I have a generic? So you have to kind of think about those kind of things too. And who are you trying to impress? Are you trying to feel good, or are you trying to impress or keep up with the Joneses? A want is something that is not essential for survival, but desired for your comfort or your convenience. When you start implementing your spending plan on your budget, again, as Lori said, you want to have an itemized list of all of your expenses and all of your income to measure and kind of balance things out. Always differentiate between what are your fixed expenses, those things that will be continuously the same month after month after month. Examples of that are car loans, your student loan, your mortgage, or your rent. The variable expenses are those things like groceries, clothes, doctor's visits, medications. That may vary from month to month. So in creating your budget, always remember, determine your net monthly income. List out your fixed monthly expenses, know what those variable expenses are, and give yourself a little grace and a little buffer between those. Track and plan for large periodic expenses. If you haven't set up a monthly payment for your car insurance and it's not the same, if you're one of those people who pays your car insurance out 6 months or longer, compare your income with your expenses and make changes accordingly. Set priorities, set goals, and also set limits. And if you set a savings plan, try to stick with it and make it a priority. Always plan to pay yourself first. Try to keep an emergency fund. We've heard that consistently throughout the pandemic, or for life's unexpected experiences, a flat tire or something goes wrong with your car. Just kind of be ready for those things so they don't surprise you and you don't have to use your credit cards to take care of that. And again, just plan ahead for those major purchases. And try not to do impulse decisions like buying things at the last minute or making a large purchase just because something's on sale.
Those are great tips. Thank you so much, Sarah. I want to turn the conversation a little bit toward something you just mentioned, actually, Sarah. The pandemic. We are in the middle of a crisis, and it has really hit some communities and individuals really hard. So I want to start with Lori. Lori, what issues do you think people are encountering, especially during the pandemic? Do you have any advice for some of the challenging situations that individuals and families are dealing with?
Sure. Yes, of course, Maheen. And hopefully we're not in the middle of the pandemic. Hopefully we're heading toward the end of it. Um, but a lot of the challenges that the clients that I work with experience was, the decrease in the number of hours of work available or loss of employment altogether. For those who still had employment, there was inconsistent or unreliable public transportation. They cut the buses and the trains back several routes and several schedules because so many people were out of work. So there was fear of losing their home due to the inability to pay rent, and no differently from anyone else. The best thing is to, as Sarah just mentioned, try to prepare for the unexpected to the extent possible. You never know. I mean, I would have never ever thought that there was going to be a pandemic that basically shut down the world for a year. So I don't know how you can really, other than just stockpiling toilet paper, prepare for something like that again. But just for things that do come up, or like a flat tire or what have you, or some type of transportation issues, or your job closing or what have you, try to plan for the unexpected. And then during this period of time, I talk to my clients because they have so many questions about what's going on and how federal assistance is going to impact them, and are they going to be responsible for for paying back money and all kinds of things. So what I want for them to understand is they understand your rights and what local, state, and federal emergency assistance programs are available to my clients, and to if they don't know, to go to someone who does know so they can find out and take advantage of. You shouldn't be put out your house, or you should, during the pandemic, or there may be other resources available to you during this time frame. And so I just want them to all, be aware of all the resources that are available to them, and if they're not, to reach out and find them.
Great tips. Thank you so much, Lori. I want to ask Sarah if she has any thoughts, and then I want to address a question that's in the Q&A box or in the chat. So Sarah, any thoughts that you want to offer?
Sure. Just to piggyback off of Lori, again, no one was prepared for this pandemic. No one knew that it was coming. No one knew how to prepare for it. And out of all of it, I believe the one good thing is that more people will start thinking about just putting a little something away for those unexpected things. There were a lot of us who did not have a savings plan before the pandemic, and now we're starting to think towards those future goals. Any amount helps. Does not have to be thousands and thousands of dollars. We don't have thousands and thousands of dollars. But if you just start thinking about the future, again, going back to something that I said earlier, pay yourself first. Put a little bit aside and don't touch it. Put it in a credit union Christmas club that only allows you to touch it once a year or in a special emergency case like the pandemic. And if you find yourself running up against credit issues, reach out to those creditors and talk to them. Do not answer the phone or not answer those mails because you're just digging yourself deeper.
Again, excellent advice. Thank you so much. I do want to share, there's a question that we received, a great question. Does this program offer help in buying a home for people with disabilities? So what I would suggest is I've put it in the chat. The Consumer Financial Protection Bureau has a nice way to look up a HUD approved housing counseling agency. The reason I shared this particular link is it lets you look it up by zip code. So if you prefer to talk to a nonprofit HUD approved housing counseling agency about either rental counseling, home ownership counseling, financial counseling, these agencies, these organizations are great resources. And many of their services are free or low cost, depending on what type of service you're looking for. So please do consider reaching out. And then I'm also going to put in the chat nfcc.org, National Foundation for Credit Counseling. Oftentimes you're going to encounter ads for credit repair companies, right? They're going to claim to help you with your credit fast and your debt and all of that. But where do you go for reliable help, right? So the National Foundation for Credit Counseling, nfcc.org. Yes, thank you. We've got the information in the chat. You can look up a reliable credit counseling agency because, again, help is available for credit challenges, debt challenges. Even if you feel like your debt is insurmountable, there's no such thing. There, as Sarah shared right in the beginning, her personal story, and now Sarah has great credit and she went through some really tough times. You can do it too if you find that you have a challenge with your credit. With that, I want to turn back to our panelists and ask a couple more questions before we go back to the chat box. And then after that, we'll wrap up. So we talked about the pandemic a little bit. I do want to ask Lori and then after that, Sarah, are there any additional resources about these topics that you would recommend for people who are looking for more?
Thank you, Maheen. So I wanted to bring up an ABLE account. And an ABLE account is a tax advantage savings account for eligible individuals with disabilities. So they're available to US citizens and legal residents regardless of your state residency. And to qualify for an ABLE account, you have to be a person whose disability developed before the age of 26. Okay, and then you're receiving the SSI or the SSDI. And so you're able to put money aside in this ABLE account, and it's not taxed, and it can be used for qualified disability expenses made from the account for education, housing, transportation, employment, training, assistive technology, different types of things. So money can go into it, and it's in it, and most of the time, this money is not going to be, that money is not counted against you. And this is very important for SSI, because I believe for this year that it can, for anyone with an ABLE account, can have up to $15,000 entered into it. And that's not looked at as a resource. So, or you know, it is not going to go against their eligibility. So it's something to definitely look into. There are lots of websites. If you Google ABLE account, lots of websites, lots of frequently asked questions that can be answered, how to get started, eligibility criteria, all things that if you know someone who could benefit from this type of savings account, should definitely look into.
That's excellent. Really, really important information about ABLE accounts. It sounds like it is a resource that, from what I've heard, is a bit underutilized. So
Absolutely.
hopefully you all can look into ABLE accounts. And I do want to ask Sarah if she has anything she'd like to share. And then we do have a couple questions in the chat and the Q&A.
Sure. Basically, I want to offer up our free modules, which is our CreditSmart consumer training. It's 12 modules, all online. All of the information is online. There are tons of resources in there. And again, it's free and available at any time. You can go at your own pace. It covers everything having to deal with credit. It's in multiple languages, Spanish, Vietnamese, Chinese, you name it, it's in multiple languages. So just go to FreddieMac.com and search CreditSmart or /CreditSmart and start your credit journey, and it will help you go through and just learn everything you need to know. And again, it has just a multitude of resources that you can use. There's also budgeting tools, there's a budget plan, there's a banking plan, and several suggestions.
Awesome. Thanks, Sarah. Thanks so much for sharing that. We are getting some questions, and I want to let you know the context of why I just shared to try out or to check out downpaymentresource.com, because I am trying to think of the earlier question. Lori had talked about home ownership, the importance of home ownership, the possibility of home ownership. So downpaymentresource.com allows you to register and fill out a questionnaire. It basically will point to you if you might be eligible for down payment assistance for a mortgage or a home loan. Again, talking to a HUD-approved housing counseling agency, looking up if you are eligible for any kind of down payment assistance. The counseling agency can also advise you about such programs. Those are some things that you can do to potentially enter home ownership. And then again, I want to take a look at the chat box here. We have a couple of questions. Actually, I think, Lori, there's a good question here. Could you please explain the difference again between SSDI and SSI?
Of course, and I was typing up an answer as well. So, and I'll finish doing that. So SSI, or Supplemental Security Income, is a needs-based program for people with disabilities, and it's SSI for one person is not even it's below $800 a month, and because it's need-based, and so it's for people who have never worked or haven't worked enough to pay significant in tax, make tax contributions to the system. Where FICA goes in, that's where kind of that's when you work. The FICA money that comes out is going into the system for you. But if you were born with a disability or developed a disability at a young age, or even if you're an adult with a disability that doesn't allow you to work and you haven't worked, then SSI is the program that you would be eligible for. And that again, and it's just meant to meet your basic needs. It's not meant to make a living off of. it's basically for food, for food and shelter. And that's what that's for, versus Social Security Disability Insurance, or SSDI. And the key word there is insurance, because that's what it is. When you get paid and they take the taxes out of your check, you're paying towards this insurance. And once you've paid enough money for enough quarters, you become eligible. And I don't know, I don't want to date myself, but I don't know if people remember when we used to get letters in the mail from Social Security, and it would tell you, right now, based on how you're working, if you were to become disabled, this is how much money you would get. Or it would say, if you if you go to full retirement, this is how much your retirement money would be. So that's just, but the SSDI part is the insurance you pay, so that if you become disabled, that's your money. And that's, again, how come anyone can receive SSDI. You could, if Mark Zuckerberg became disabled, doesn't matter how much money he has, he's eligible as long as he's paid into the system for SSDI. And so that's why there's no limit to the number of resources that you can have, as far as, you can own 20 homes and 14 cars, and it doesn't matter. The only thing that will impact your SSDI would be work and earnings. And I'm just going to type up a little something else. And did anybody have any other questions about the difference between these two disability programs?
Thank you, Lori. And let's see if anybody types anything additional, but I do want to get to a question raised earlier. It is, do you have a national or regional based average percentages, or yes, national or regional based average percentages to use for various budgeted items, such as housing, transportation, food, medical, etc. And Lori, I want to ask you if you're aware of any kinds of suggestions around budgeting in this manner, if you're looking with the context of a person with a disability, SSI, SSDI. Any thoughts on that?
If you're looking to budget, if you're looking to budget with a fixed income, I think that the same steps that both Sarah and I talked about are important, to just kind of identify identify what your needs versus wants are, and to live within your means. I'm trying to make sure that I'm going back. I'm trying to make sure that I have the full question here.
Sure, take your time.
But yeah, but honestly, it can be very difficult to set aside extra money when you're on a fixed income, if you don't deem that income to be enough to even sustain what you currently have. Always, what I think always, if you're able to go to work or do any work, you always come out better working than not working, even when you're on your disability benefits. So if you find yourself in need of earning more money or bringing in more income in order to be able to set money aside, or to help you sustain a livable budget, then I always say test your ability to go to work, because you'll always end up better in the long run, always.
Great. Thanks, Lori, for sharing your thoughts there. We do want to wrap up, unless there are any burning questions that come in at the last minute. I do want to ask Sarah if she has anything she'd like to add before we close today.
No, the last thing I want to say is CreditSmart.com. Through Freddie Mac, there are tons of resources in there. Especially, there's a lot of budget automated tools in there that will help you with your budgeting. And again, as we both said, differentiate between a need and a want, and what's more important. And you can always adjust. You can always go back again and adjust as your income changes.
Thanks, Sarah. So I just put in the chat, freddiemac.com/creditsmart. And then here we have a slide in front of you that is also giving you some of the information that was mentioned today. And then again, Lori, I know you just shared a lot of great information. Any closing comments from you?
Um, it's just, well, it's just that, financial literacy and budgeting and credit are just all really important, not to just people with disabilities, but to everyone. It unfortunately, demographics and groups of people that are sometimes marginalized are really easy prey to be taken advantage of. There are a lot of scams and dishonest people and organizations that will try to take advantage of my clients and their situations. And it's just so important that people are able to identify legitimate resources to help them understand what's in their best interest. And
Yeah.
so I always just hope that people just reach out and utilize those resources.
Absolutely. Thanks, Lori. And if it's too good to be true, typically it is. Oftentimes, like Lori said, the scams that are out there, scammers are constantly innovating. They're coming up with the next scam and the next scam. And there's a lot going on with COVID scams right now, anything from vaccine related to benefits or, all kinds of things. So always have that consumer protection hat on when you're thinking, should I click on this email? Should I answer this text? Should I give them my social security number? No. If you haven't called the entity yourself, you're not calling the IRS yourself, they're calling you and claiming to be the IRS or whomever. Please do not give up your personal financial information. Don't even give your date of birth. Your everything, your date of birth, your name, your address, that is your personal information. So protect it, because it'll help you on the path to financial wellness. So with that, I want to thank all of you for your very active participation today. Again, this webinar has been recorded, and Easterseals is going to be posting this and has a lot of other resources on financial capability on the Easterseals microsite with Freddie Mac. Thank you so much. Have an awesome day, and we'll see you next time.
Thank you.